New updates have just come out regarding an Ethereum Spot ETF, and whales have been seen accumulating massive amounts of this altcoin. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz Alpha is proud to say that we now have a winning portfolio spread among different sectors. We're also very well positioned to get into good IDOs. What about airdrops? Check the number of airdrops we've received until now. Add to that the original Celestia airdrop and more coming. We've achieved all of this by giving many deep research, diversified calls. Check out our numbers in December. We now plan to reallocate profits to low caps, diversify to new sectors, get bigger airdrops, catch latest trends like Bitcoin and Lena inscriptions, and DCA during market flushes. We've also recently introduced a yearly subscription on Patreon. If you subscribe to our yearly plan, you get 1 month's membership completely free. Check out Altcoin Buzz Alpha with the link down below. After trading for just a week, Bitcoin ETFs have exceeded silver ETFs in the US in terms of assets under management. Silver was previously the second leading single commodity ETF in terms of AUM in the United States. However, spot Bitcoin ETF funds, including the conversion of Grayscale's GBTC Trust, which holds approximately 647,000 Bitcoin, which amounts to $27.5 billion in assets under management. That places silver in third place in terms of assets under management within a single commodity ETF asset class. Silver currently holds approximately $11.5 billion distributed across 5 ETFs. In comparison, US funds that hold gold have a combined AUM of $96.3 billion across 19 ETFs. And United States presidential candidate and former President Donald Trump has vowed to never allow the Federal Reserve to create a central bank digital currency, or CBDC, in the country.
Tonight, I'm also making another promise to protect Americans from government tyranny. As your president, I will never allow the creation of a central bank digital currency. Do you know about that?
He added such a currency would give our federal government, the absolute control over your money. They could take your money and you wouldn't even know it was gone. This would be a dangerous threat to freedom, and I'll stop it from coming to America. In 2023, fellow presidential candidate and Florida Governor Ron DeSantis made a similar pledge, promising to nix a central bank digital currency on his first day as president. And on January 17th, former U.S. Securities and Exchange Commissioner enforcer John Reed Stark said the crypto movement could hold the key to the 2024 presidential election. Stark added every presidential contender should immediately appoint an internal crypto czar to serve as a crypto focal point and crypto spokesperson for that candidate. The crypto czar should join the stages of all the crypto spaces and participate in all the crypto symposiums and meetings to mobilize crypto enthusiasts and issue a proclamation as to the candidate's position on crypto-related issues. Blockchains are public, or at least the good ones are, so we've been conditioned to think that blockchain privacy is an all-or-nothing game. It has to be not private at all like Bitcoin or Ethereum, or completely 100% private like Secret Network or Aleph0. But that's not true, and our partners at DOP, which stands for Data Ownership Protocol, gives you an idea of where they stand just by their name. They want you to own and control your data with their selective transparency. DOP offers the chance for you to decide what, when, and how much of your data you want to expose to the public, so it's not all or nothing. Real privacy moves on a sliding scale, and sometimes it matters a lot. If you're paying a bill online, or maybe something that costs more than $1,000, then maybe you don't want others to see that info. But then smaller transactions of sending $50 to a friend or buying a small free minted NFT, you may not care as much who sees it. There are a lot of advantages to this method. The biggest advantage by far is that it's less of a hassle dealing with local regulations worldwide. Many jurisdictions are becoming hostile to crypto now, and some of these jurisdictions have the guilty until proven innocent stance, even if they say they believe otherwise. DOP has also just had a very successful testnet. Writing on X, 39 days ago, we launched DOP's testnet to demonstrate our technology that enables encryption, decryption, and private transactions on the Ethereum blockchain, the first step towards data ownership. Over 1.2 million unique users across 157 different countries created a DOP wallet and tested the DOP protocol, with more than 280,000 completing 100% of the stages and qualifying for the future DOP reward, thanks to the 650,000 users who shared the testnet with friends and family on various platforms. Check out DOP and try their testnet with the link down below. The United States Securities Regulator has delayed its decision on asset manager Fidelity's Ether ETF. The Securities and Exchange Commission said on January 18th that it was extending its deliberation period by another 45 days so that it has sufficient time to consider the proposed rule change and issues raised. The SEC marked March 5th as the next date for a decision. Bloomberg ETF analyst James Seyffert said in a post on X that he completely expected the delay, adding dates that really matter are in late May in my view. Some analysts predict the SEC could approve a number of pending spot Ether ETF bids simultaneously, as they did for spot Bitcoin ETFs. Opinions are split on the likelihood of the SEC approving spot Ether ETFs at all. Eric Balchunas said earlier this month that he's pinning a 70% chance of approval by May for spot Ether ETFs based on the SEC's final deadline for VanEck's fund. However, Morgan Creek Capital co-founder and CEO Mark Yusko said the SEC is still hostile towards crypto despite approving Bitcoin ETFs. He added that the regulator may also class ETH as a security, unlike Bitcoin, which SEC Chair Gary Gensler previously said he considers a commodity. Cardano, the 8th largest crypto by market cap, has been suffering due to the recent bearish trend. However, ADA supporters may be relieved since an analyst has made a bold prediction for the Cardano price. Crypto analyst Ellie Martinez expects the ADA price to reach a $7 target, as the crypto's chart has been mirroring the 2020 trend. After experiencing a crash due to the COVID-19 pandemic, Cardano soared to an all-time high of $3.10 in September 2021. Moreover, Martinez found a similar pattern in Cardano's current consolidation phase. The 2021 bull market propelled Cardano's price to gain about 3,000%, while Martinez's predictions suggest a 1,300% increase from the current price of 49 cents. The analyst noted that if history repeats itself, Cardano would witness an upward trajectory around March this year. Moreover, he expects the ADA price to top the bull cycle at $7. And at the same time, the Cardano network is witnessing an awakening of sorts, with ADA whales pumping up the network with an impressive $13 billion in large transactions. This activity is notable, particularly when contrasted with Ethereum's $5 billion 7-day average for transactions of similar size. Despite this flurry of whale activity, Cardano's price performance has remained somewhat muted. Recent weeks have seen the price of ADA losing momentum, reaching key support levels. The duality between the significant transaction volumes and ADA's negative price action raises questions about the underlying dynamics at play. Are the whales accumulating ADA for long-term strategic positions, or are the transactions part of a broader redistribution or profit-taking strategy? Arbitrum, the leading scaling solution for Ethereum, has captured roughly half the entire rollup market share. Rollups are designed to help users transact faster and more inexpensively on the Ethereum network by moving computation off-chain and batching a collection of transactions before posting them to Ethereum's base layer. With $11.47 billion in locked value in its smart contracts, Arbitrum has captured about 48% of the entire rollup market share. Nansen research analyst Sandra Lau says Arbitrum has robust fundamentals. Notably, growth in daily transactions and monthly revenue has been impressive. Despite Ethereum surpassing it in daily transactions, Arbitrum averages 600,000 to 900,000 transactions per day. This is outpacing its rollup rival, Optimism, the second largest rollup with over $5.5 billion in locked value. Arbitrum's revenue trajectory has been consistently upward since September 2023, and just last month, Arbitrum generated revenue of $11.9 million, its highest monthly earnings to date. However, some crypto investors see risks in Arbitrum due to its upcoming token unlocks, which will free up a massive amount of ARB. Right now, Arbitrum has a very small circulating supply of 1.27 billion ARB, only 12.75% of its total token supply. However, in about 2 months, 1.11 billion ARB, or 87% of its circulating supply, will be unlocked. That's it for Altcoin Buzz News Update. I'm Ruskin Buffington. Thanks for watching.